First, though, let's get some JOLTS and factory orders with Rick Santelli. Hey, Rick.
Hi, Carl. Indeed, on this jobs week, job opening labor turnover for April comes in at 7,391,000, above the 7.1 million estimates, and sequentially above slightly revised 7.2 million in the rearview mirror. That is the best since just February because we reversed that March downturn. Now let's look at factory orders. Minus 3.2 expected, minus 3.7 arrives, weakest since January of last year, and a negative revision from 4.3 to 3.4 for previous month. Take out transportation, still negative, but a bit less negative, down 0.5%. We're expecting a positive number, down 0.5%, weakest since May of 24. Now, these are durable goods coming up. These are final reads that replace mid-month read. Minus 6.3 remains at minus 6.3. That's the weakest going back to Jan of last year. If we look at durable goods ex transportation, a dramatic improvement, up 0.2 equals our last look, and that would be the best since it was up 0.4 in February of this year. If we look at capital good orders, non-defense ex-air proxy for capital spending, deteriorated by 0.2% from minus 1.3 to minus 1.5, making it the weakest going back to February of 23, Feb of 23. And finally, if we reverse from orders to shipments, it remains at minus 0.1%. Right now, we're looking at 392 in a 2-year, and after all the data, we oscillated a bit in terms of price, but we ended up at the same place. That is down 2 basis points. Long end down much more dramatically. Hence, we're looking at some steepening of the curve. 10 years at 441, down 6 basis points. Carl, back to you.